What's up guys, Lee Ryder here, Crypto Didact, and in this video we're going to continue our dive into the different market auras. In this video we're going to cover market aura number 3, which is momentum. Momentum is important because it's describing the rate of change, the rate of price change over time, and it's very important as a confirmation indicator. So without further ado, let's get to the screens. Alrighty guys, well welcome to the Momentum lecture, Market Aura number 3. Momentum is very important because it is measuring the rate of change or the speed of the price, and so we use this in conjunction with the other auras as confirmation. And so if we look at the definition, if we remember from physics class, momentum is mass in motion, and in trading we're going to think about it as price in motion, or the speed of change in price, and it is a derivative of price. So market momentum is measured by continually taking price differences for a fixed interval of time. If we look over here to the formula, it's M equals V minus Vx, where V is the latest price and Vx is the closing price X periods ago. So commonly in momentum we use 10 periods for that X, but you can stretch that out, let's say 20 or 30 periods, 100 periods, if you want to smooth the data out, if you're looking at longer term price changes, or you can close it up if you want to make it faster, which I don't recommend. 10's pretty quick. Once you get that calculation, you're going to get this chart that looks like this. Now, this one is stretched out. This is about a year of price change or speed data, and so it doesn't look like much, but let's take a look at the chart. So I'm going to use the same charts I used in previous lectures because I want to show how these auras stack and kind of work together. So if we look over here, we had these previous breaks of resistance here, and we confirmed that those breaks were good because we got increased volume, and we got these large spikes in volume. And going back to that breaking the window, right, we need a lot of volume. Well, also we need speed, and so this is what momentum's going to do. And as you can see here, we got these big step ups in speed. And so what this is telling us is not only do we have a lot of volume, but we also have a lot of velocity behind the move, and this is very critical for making sure that we're getting these home run plays and we're getting in a move that's going to be large and in charge. So we can also look here and see that we're also having convergence, and we have a trend in speed as well. So we'll talk about that later in our convergence and divergence video. But for now, let's just look and think about it as speed. So on to the next chart. We're going to see the similar thing where we have our breaks and our resistance levels, and this was coupled with an increase in volume. And then also what you can see is we got a huge step up in our speed, or our rate of change in price. And once again, this confirms that not only do we have a lot of volume that's breaking to this level, but the speed is increasing, which is critical for catching these large moves. And that's pretty much it, guys. I like to think of momentum as the speedometer in my car, and that's showing me how fast we're going. Are we decreasing in speed, increasing in speed? And so you should kind of think of it the same way. And I hope that helps, and I'll see you in the next video.